So basically, when I say income tax, it has a very different meanings. I understand that I'm living as a human being because I'm interested to earn some income. But when we are living in economy, we are interested for getting more income. If I start my job, I'm getting 10,000, then I want 20,000, 30,000, 40,000, so on. So when I'm progressing in my career, I'm interested to earn more and more income. But when I'm earning more income, I also supposed to pay the taxes and charges which I need to bear about. So considering the same, what I'm doing that I'm progressively charged for whatever the taxes I'm paying for. So considering the same, the Income Tax Act was proposed in 1878 regarding taking care of individual income. There are two types of income. One is the income from business and profession, and second is income from salary. Now, income from salary is a core part which was considered income tax initially. Later on, it is added with other incomes. So, income tax is basically an activity where they will be charging me for whatever the earnings I have made. So, if I say tax, it's a tax on my income, it's a tax on my product, and it is tax on my activity. So income tax is tax basically on my income. So here we are covering the income part. The product part or activity part, they are covered under indirect tax. Now, what are types of tax? As I said, direct tax we are covering under income tax, which covers salary and other things. So direct tax that we are covering is called as income tax, whereas indirect tax, which is covered by payment of your goods and service, they are considered to be indirect tax. Now, why it is direct tax? Because it is directly imposed on persons and directly concerned or directly paid by individual. Whereas in case of indirect tax, it is indirectly paid or collected when you avail the services or when you take the goods or when you consume the goods. So indirect taxes are not directly paid; they are paid as a part of price. Whereas direct taxes, they are paid directly based on level of income. For example, my income is up to 12 lakhs. Now my income tax will be zero. If more than 12 lakhs, whatever the extra part I'm paying, I require to pay the tax. In income tax, the tax is levied on directly a person's income or a wealth. So whatever the income or wealth appreciation I'm doing, I need to pay the tax. And that's why it's called as a direct tax. Whereas in case of indirect tax, my tax is payable based on whatever the duty, whatever the goods, whatever the service I consume. For example, if I go to the hotel, I take some food, I take some AC service. If I go to cinema, if I take a car, if I take a bus service, if I take mobile, then in that case, whatever service I'm taking, I'm paying for service that is called as a indirect tax. Now, tax is known as when I'm paying any tax, there are different terminologies used. So, what are terminologies? First, tax means a payment made to government for country betterment without any return. Now, tax is something called as a portion of your income which you give to the government to make it uniform or to provide an opportunity for government to collect the funds for social reforms. So when I earn, suppose my tax is 10%, income tax is 10%. I earn the salary of 1 lakh, then I'm paying tax of 10%, that is 10,000. If I having income of 10,000, if tax is 50%, I'm paying 5,000. So whatever the income part is there, I'm paying the tax on same. Any doubt till now about meaning of tax?
No, sir.
No, sir. No.
Thank you. So we'll explain the later part. Duty, cess, surcharge, and income tax. Now, when I pay the income tax, normally it is not only come with the tax; it come with the something called as surcharge, additional tax, and so on. So duty is levied on goods, cess is levied on specific purpose, and surcharge is additional tax burden. So when you're paying the tax, so education says for redevelopment. So basically, the surcharge is charged on income tax, but the cess and duty they are normally on indirect tax. But cess and surcharge, the difference is cess is tax with additional. It means 10% I'm paying a tax, and if cess is there, 3%, 5%, 7%, and 10%. So my tax will be 10% plus 3%, 10% plus 5%. Whereas surcharge will be based on income after certain limit. For example, income tax up to 10,000 will be 10%. But additional surcharge, it means if my income is too high or increasing more in number, in that case, additional amount government will charge me. For example, my income is up to 50 lakhs, then amount charged to me will be 10%. But if income is crossing more than 50 lakhs, then in that case, my surcharge will be additional part which government will be asking. So, cess will be combination with tax, but whereas surcharge will be additional tax to control my flow of income. So again, I repeat, tax is my basic duty which I'm paying. Okay, and duty here it means the charges which I pay for goods, whereas cess is addition to the basic tax rate, so that my additional purpose. Now, normally cess is taken for development which offers suddenly. For example, it can be earthquake, it can be education, it can be climate changes, it can be certain diseases. So it can be anything which is immediate requirement. Whereas surcharge is cutting down your additional income which you are earning, so that the distribution of income over the population will be equal. Because if I do not have surcharge, then economically monopoly will be created and it will disturb the national wealth and geographical issues. And it will also create socio-economic disturbance, creating crimes. Then people will have monopoly and price control and other issues. So that I will also have surcharge. So normally tax plus cess is there, but when your income surpasses certain limit, you will be additionally taxed. That is known as surcharge. So tax is a basic charge, cess is the additional charge, and surcharge is a super charge to control your tax, which in where your income is more than specific limit. Okay. So when I say taxation, taxation is defined as a person who are taxed having to pay taxes irrespective of corresponding return or goods. The taxes may be imposed on income, wealth, or person. So, if I want to define a tax, there is no fixed definition. But lawfully, it is said taxation is a part of income which I am paying to the respective authorities for my level of income or my consumption of goods and services. It can be imposed on artificial person as well as natural person, and it is categorically planned as a direct or indirect based on its source of collection and inputs. Now, there are certain quotes about the tax that inflation is taxation without legislation. Now, what is inflation? The inflation means where the economy is boom. Suppose most of the production is going on, prices are increasing. So tax is one of the way to control the inflation. Similarly, tax is invisible hand to see that the if your income economy is in recession, I can cut down the taxes and it will help me to boost my economy by having more money. So as per these two economists, the tax is the invisible hand which help me to control the flow of economy in more profitable or better way. Now, what is my system of taxation? I have, as I said, two systems. One is the direct tax and second is indirect tax. The direct tax, it is divided as income tax and corporate tax, whereas indirect tax, which is going to be our fourth semester, it is concerned GST. Now, most of you have done the project in GST. That is IGST, CGST, UTGST, and so on. So, more in this syllabus, we are mostly concerned about direct tax. Now, here the term corporate tax, it can be said as income from business and profession. Now, what is type of taxation we have? We have three type of taxation system. One is a progressive, regressive, and proportional. Progressive means which is going to increase as your income increases. For example, if my income is 10,000, it is 1%. 20,000, it is 2%. 30,000, it is 3%. So it means if my level of income increases, then in that case, my tax rate also got increasing. So in progressive, change in tax rate happens to be in sequence to the change in level of income. Income increases, tax percentage increases. The second tax system will be regressive, where my income increases, my rate of tax will decrease. Normally, no economy follows regressive taxation. In case your economy is underdeveloped, in that case, regressive taxation can be followed, but it is normally not welcome because if more income and less tax, it will not create any social justice. It will create a monopoly because person earning more, he will not pay tax more, but the person earning less, he will pay tax. So in case of most of the time, regressive taxation is never followed. But when you want to control the depression in economy where people are not spending, in that case, you can follow regressive taxation. But it is very rare that in any economy, regressive taxation is followed. So most of the time, they follow something called as progressive taxation. Now, what is proportional taxation? Proportional taxation means how much your income changes. Now, in economics or in costing, we call something marginal cost. If I add one unit, I need to pay additional tax. For example, for one unit, I am paying 10%. Then for second unit, I'm paying 20%. Because having one more unit, I'm paying one more tax rate. So proportional taxation is normally indirect tax. Whereas progressive and regressive taxation is basically on income tax. So earning income by proportional taxation is mostly indirect. Any doubt till now? I'm expecting no doubt, so I'll progress further. Now, coming to the story of Income Tax Act, we got independence in 1947, but we were following British taxation system. Our taxation system was following whatever the rules the government of British, they have followed just for their own comfortable seats. Otherwise, we are not having our own system which will give an idea how to tax, where to tax, and why to tax. The World War II laid a reason to basically impose and initiate taxation. Why? Because when we started, we were having only 16 business houses. This business house was not a greater part. What they were doing, they was basically just concentrating on traditional products. They were concentrating to see export of gems and jewelry, so on. We started our financial planning system in 1951. So the first financial plan was regarding our dependency on agriculture. Second plan was agriculture processing. And the third plan we started in 1961 basically talk about companies. And that's why our Income Tax Act need was highlighted in 1961. The income tax was first introduced in India by a British ruler called James William in 1860. So it is almost 100 years back the tax was started. He was the first finance member. Now, when I say first finance member, in British rule, they used to appoint a kind of ministry for the India to control. It can be your controller or it can be your guider. These people has to take care the laws for Indian economy so that they will be supplying the raw material to the British economy. Now, James William, what he had done, he has, after the World War, when industrialization started, there was a great need of raw material. They find out India is a greater source of raw material. So to get the better source, better people, they formulated an economy and they start collecting the money. Because if I'm giving some output, I want to construct the road in India, I want to give some medical facilities so that my raw material will be shifted to the UK. I need to pay. And why England will pay? If Indian people get in benefit, Indian people should pay. So they started taxation system in 1860 in India. The best example of why the tax system launched was after 1843 World War. They had to incur a heavy expenses for roads, heavy expenses for trains, and so on. So when they have to meet these expenses, they need to pay the money. And to avoid burden on UK, they started taxation. As I said, our Indian taxation started in 1961 as a third five-year plan. The simple reason behind this was India was in progressive mode and they are able to expand now beyond agriculture. So we proposed income tax in 1961, but actually it came into force 1st April 1962. Now presently we have launched reformment in Income Tax Act, which is 2025. I'm expecting all of you read that tax. How many of you read that tax? Anybody has understood what are the provisions and changes? Okay, no issue. I expect that if you not read it, please go and read that tax so that you get in clarity what is new tax, what is the old tax, and what are the changes in the same. Okay. Now, henceforth, whenever we refer, we call it income tax 1961, but actually we started in 1962. There were two reasons why it is 1962. First, we proposed a system which was amendment to the Income Tax Act 1860. So it was 100 year back. Secondly, our economy was agri-process. It was not 100% industrial economy. So some amendments were made, and that take one more year, and we started from 1st of April 1962. And hence, we started every financial year from 1st April 1962. Now, coming back to basics, what is income tax? Income tax is a tax on the income. It is a tax levied on a total income of a person which he earns during the 12 months period. It can be your assessment year, financial year, or calendar year. Now, when I say as a person, we normally consider as calendar 12 months, but as per income tax, it is called a previous year. In succeeding slide, we'll discuss what is called as a previous year and so on, and what are terminology. Now, before moving further, I'll take a pause. If anybody has doubt, they can ask. Anybody has doubt? Anybody any doubt? So let's revise what we learned. Income Tax Act is tax on the income which we earn. Income tax is basically charged progressive, and it has a different meanings based on my income earning. Income tax is basically levied to control the flow of income and to understand and get the help for government's well-being. Now we'll proceed further and we'll discuss more about income tax. Now, what is Income Tax Act? Income Tax Act 1961 says it determines person and its liability towards nation depend on level of income. So if my income is 100, my liability will be regarding to understanding how much income I'm having. If my income is 1 lakh, my liability will be more. If my income is 1 crore, my liabilities will be further more. So based on my income, my tax will be more. So when my income increases, tax will be more increased. Secondly, Income Tax Act 1961 has divided into different sections and schedules. What is meant by section? Sections are nothing but different parts of income, like my different source of income that I'm earning. Whereas schedules are different procedures where I can list out how I'm going to charge. So section means different parts of my income. It can be income from house property, income from business profession, and so on. Or it can be perquisite, it can be allowances, it can be telephone allowance, it can be petrol allowance. So there are sections. Whereas schedule are the processes where and how I'm going to get a tax. So the rules of income tax for every year are prescribed by budget, and they determine what are my tax level, what are my charges, what are my discounts, and so on. So every year, the central budget laid down the rules which are followed across the nation. So we always read on 1st of April and nowadays in the month of March, the Finance Act. The Finance Act is nothing but a summarized budget which is presented by the government. It talks about how much is the last year earning, how much is going to be this year earning, and it will be giving a clear cut idea how much income will be there and how much expense will be there. This Finance Act is nothing but a summarized budget presentation by government where they will talk about what the tax rules they are going to follow. Now, budget is one of the source where you will get how the income and expenses are made. And we are more interested on income part because as a government is not doing any business like selling goods or services, etc. They are only doing social justice, social service. So they are taxing on the economy that is direct and indirect. So what are the direct rules? They are covered as per the CBDT. Now what is CBDT? It's Central Board of Direct Taxes. It is nothing but the administrative board which is controlled and regulated by finance minister and prime minister who decides what can be rules for direct taxation, what can be amendments they can be made, and what can be the laws which can be passed. So henceforth, whatever the income tax rule we are discussing, they are nothing but the advisory notes, amendments, corrections, and propose of Central Board of Direct Taxes. This board was initiated as a combined effort to see that instead of political interference, I am able to get a taxation system which is favored my economy and overall development. This board is empowered to take the decision about how much tax to be levied, what should be the source, and what should be incidence of tax. This board take care the percentage and so on. But please remember, this board do not have any direct authority to levy a tax. They can propose, they can give the suggestion, they can observe the thing, they can help the decision, but ultimate the taxation rules has to be passed as a finance bill. They cannot be separately presented and directly imposed as a normal taxation. Now, there are two types of things always there according to income tax. One is circular and other is notification. Circular is nothing but a common statement or a justification or explanation which is for certain problems regarding clarification of doubts about the scope and meaning of provisions. Whereas notifications are guidelines which you have to follow compulsory to certain changes. So circulars are for information purpose. They are given for clearing your doubts. They are circulated for making you understand certain terms. Whereas notifications are nothing but the instructions which you're supposed to follow. So if anything is given as income tax circular, it means they are for your information. Circulars are not compulsory. Whereas if I say notification, notifications are mandatory because they are important as per the law. So circulars means information which is given addition to the law so that you can understand the law. Whereas notification means the information which you are getting is mandatory and this amended information you need to follow. So I repeat again, in case of income tax, circulars, information purpose, whereas notifications are guideline which everybody has to follow. Then certain more terms, case laws and doctrines of precedence. Case laws in case of income tax are the laws which are nothing but the previous incidents or previous activities which create certain issues, and based on that, the judicial body has taken certain decisions. So case laws are nothing but we can call as short stories based on which income tax rules were changed. Whereas doctrine of precedents are additional process which is set beyond finance bill so that smooth function of system of taxation will be there. I repeat again, circulars are for information and notifications are the compulsory thing which as a process I need to follow. Similarly, case laws are the laws of observation which is filed in court or judicial procedures, which are nothing but the additional things you need to understand in case of income tax. And where doctrine of precedence are the processes which are set in due implication of tax. If I say simple words, I make a law. When I test the law, I find some mistakes are there. So that mistakes when I study, that will become an example. That example means case law. But out of that example, when I learn that okay, instead of X procedure, I can add X plus 1, 2, 3, 4, 5 procedure, then it is called as doctrine of precedence. So case laws are the historical examples of what problems happen on implementing of law, whereas doctrine of precedence means these are nothing but the processes which I have said additionally. Anybody has doubt till now about notification so on? Any doubt till now? Okay, no doubts, no questions, so I proceed further. Now we'll talk about certain definitions which are part of income tax. Section 2 of Income Tax Act 1961, it talks about definitions. Now most of the definitions are inclusive definitions. Why inclusive? Because it covers maximum part. But sometimes when it comes to the defining income, they are exclusive because it covers maximum part, but some parts can be added there. So inclusive means including all, and exclusive means they are covering all. So what definitions are important? The first is person, assessee, assessment year, previous year, assessment, income, and dividend. As I notified, inclusion exclusive will show see more in detail these definitions. Now, as per Income Tax Act Section 2, subsection 24. Now, when I say Section 2, it's a section. And as I notified earlier, it has sections and paras. Let us continue. Okay, let it be. It has sections and paras. So, as per this, Income Tax Section 2 and subsection 24, income means the monetary benefit or money or any kind which are received periodically from a definite source. It can be single source or it can be multiple source. It can be in terms of cash, it can be in terms of kind, or it can be in terms of gift. So when I receive the income from a definite source, that can be single or multiple, either in terms of cash, kind, or a gift, it is called as a income. Now, the second definition, assessee. Okay, let me give an example. Suppose my parents give me 1 lakh rupees. So, source of income, parents. It can be gift, but again taxable. If I earn a salary from X factory, so salary has a definite source. So, it can be transferred to the bank or it can be given hard cash. It has taxable. Suppose I have multiple source. I'm earning income as a rent from 5 different houses which I have. But 5 different houses, it can be 5 different sources, but there is definite source. So its income can be in a cash, income can be in a kind, or in a gift. Whatever the income I can get it, I can find a source and I can definitely account it to the certain source. It is income. Now, what is different between black money and regular money? Black money has not a definite source. It is earning, but I cannot define from where I earn because if I get a salary of 1 lakh, it's a definitely source because I perform for that 1 lakh. But in case of black money, I'm performing beyond my capacity, but I cannot say that this is a definite source because for my income, I have certain base, but for my black money, I don't have certain base or parameter. So I cannot trace the source of income, and that's why it's a called as black money. Now, assessee. Who is assessee? Assessee is a person who is liable to pay the tax, or he is a entity, can be artificial person, natural person, a lawful person who has earned a definite source of income, either in cash, kind, or a gift, or a mix of this, and he need to pay the tax. So he is a person who has to take care that whatever the portion of income he is earning and the tax applicable, he has to pay to the government. Now, there are two types of assessee. One is direct assessee and deemed to be assessee. The person who is earning income, if he is capable of understanding law and paying the tax, he is a direct assessee. If the person who will become taxable if he start earning, for example, he is a minor, then he is deemed assessee because he is not yet earning as directly. He is earning for his own sake, but in that case, the whomsoever taking care of that minor, they have to pay the tax. Secondly, when I start earning, I become assessee. That deemed to be. So deemed means an agent or an incidence which make me liable to pay the tax. So assessee is a person who is going to compulsory pay the tax. But deemed to be assessee are the agents or a person who will pay the tax based on happening of income or incident they are required to do. Now, what is a person? As per income tax, a person can be anybody who is earning. So it covers a natural person as well as artificial person or a legal person. Now, what is a natural person? He, she, or it, all three genders are natural person. So an individual can be he, she, or transgender. Then it also add legal persons like a firm, a company, association, a partnership, a local authority, or anybody. Whomsoever in any form, if he is earning any income, it is considered to be a person. Now, if we see all the definitions, it is section 2, subsection 7, section 2, subsection 24. So all the definitions, they are covered under section 2. Now, we'll talk about first, what is the liability of person? We covered individual, liability of person. Now, assessment. Every now and then, we use the word something called assessment. Assessment means examination. Like you take examination, the other word for examination is assessment. To assess means to check, to calculate, to verify. So assessment is a process to determine what level of tax a person need to pay or payable. So it is a process of determining the correct amount of tax a person has to pay as his liability. The assessee is a person who assess or who examines amount of tax. So if I'm a person paying a tax, I'm a taxable person. An assessment of my income will be done to understand how much tax I require to pay. So assessee as a person need to pay the tax, and assessment means the process which I need to follow for paying my tax. Now, what is assessment year? Assessment year is a year which starts from 1st of April of every year and ending on 31st March of next year. For example, if I consider assessment year of 25-26, then the financial year which end on 31st March of 26 and started on 1st April 25 is my assessment year. income earned in 1 year back, that is, if suppose current year is 25-26, then income earned in 24-25 is tax in next year. Then what is the previous year? The previous year is that financial year immediately before the assessment year. Suppose I am paying tax in 1819, sorry, 1920. Then my assessment year will be 1890. And before my assessment, there is one more year which is called as the previous year, and that is 1718. So if I give example, it will be more clear here. If I'm paying tax in 19, that is 1920, my assessment year will be 1890. So I'm always paying a tax for the previous 1 year. So that is assessment year. And before that year, whatever the years, they are called as a previous years. Suppose to avoid confusion, 2020, if I'm paying tax, it is a tax of 2019. So 2019 will be called as an assessment year. And before 2019, whatever the years, they will call as a previous years. It can be 18, 17, 16, 15, and so on. So assessment is always done based on income which I earned in previous financial year. Whereas the previous year means the years which are previous to the my assessment year. Any doubt in this? Okay. I guess no doubt. I'll proceed further. Now, till now, we discussed the term called as a person. We discussed the term called as a tax. We discussed the term called as assessment year, previous year, financial year. So, just to revise, we started our taxation system in 1961. It is a progressive taxation system because whenever the income increases, the level of tax it also increases. So in India, we follow taxation progressively. Our Income Tax Act was started in year 1961, but we actually started the procedural part in 1962. Our all key definitions are covered under section 2 of income tax. Depend on type of definitions, they are covered as subsection or a paras, which are followed certain clarification and so on. Income tax is always divided into core tax, surcharge, and duty. The tax which we are paying is calculated on the level of income, whereas cess is additional tax which we pay for certain specific special purposes, and surcharge is additional tax if we earn more income, then this additional surcharge will be charged to us. We discuss on person. Person is a individual or legal person or artificial person who liable to pay the tax. Then assessment year is that year which is considered a period of 12 months for which I need to pay the tax. Suppose it's a calendar year of 2020, then my assessment will be 2019, and previous year will be before 2019, whatever the years, they will be called as a previous year. Now we'll talk about how the total income and total tax liability is calculated. I'm just giving a summary here. After summary, we're going to discuss about each thing in detail as a part of our syllabus. The total income combined of different heads of income, it has major 5 heads. One, salary, business and profession, capital gains, agriculture income, and other. Now, the fifth other comprises a different income because there's certain minor source of income from where I'm getting money. So what I do when I find out total income, then I get different income combined together. I'll assess how much income I have received from my different source. The step one, I find out whether I'm a legal Indian person or foreign. Then combine all the hits. I deduct whatever the deduction allowed under income tax. So step three, what is chargeable? I'll find out what is not chargeable. I deduct it, and based on that, I club the income of my spouse, minor child, and so on. Then in due procedure, if I any losses, I'll deduct the losses and find out my gross income. After gross income, I'll find certain concessions or deductions which are provided by the law. And after deducting all this, I'll find out how much money is liable for tax. And based on that, I'll go on calculating tax and surcharge. Now, this is a just summary what Income Tax Act is there. We are going to study the different pie heads and their procedures, and then we'll discuss how the tax is calculated and paid. So, this is all about Income Tax Act 1961, its procedure and part. Anybody has any doubt? Anybody has any doubt? No doubts? So let's revise what is Income Tax Act. Income Tax Act is that act which talks about how much taxation is given on income. It generally decides a progressive taxation where we have followed the British taxation policy and we have norms and procedures which are said to be observed. Income tax is basically a taxation on individual earning where we have a definite source. Income tax is a progressive and it is taxable to the all individuals who are earning money from any definite source and liable to pay the tax. It can be natural person or artificial person. Income is divided into five heads. That is a capital gain, salary, income from agriculture, income from business and profession, and other income. Income tax is charged based on 12 months period that is known as assessment year. Before to that, whatever the period of 12 months or more, each calendar year will be recognized as assessment year. So that's all from my side. Anybody has any doubt? You can share me in chat box. I will share the notes by email about this lecture. But if you have any doubt, you can just ask me. Otherwise, we can close down so that you can go for the next session. Any doubts? Okay. I assume that you understood it. So let me know if any doubts so that I can clarify and help you too. Okay. So wish you a wonderful time. Thank you for joining the session and peaceful learning my lecture.